Hi there, welcome back. You're watching Buy Now Sell Now on ET Now, and let's begin with taking all of the stock related queries. Remember viewers, just a quick reminder, this is the show where we get you answers for all of your stock related queries. Remember, you can write to us on the WhatsApp number that will be flashing on your screen, and also you can write to us on our social media platform X as well for your queries. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the price, time horizon and the quantity in case you've already purchased the stock, and that way our experts will be able to help you better. And talking about our experts today, we have Kunal Bothra as always on the technicals, while Avinash Gorakhshekar, we have him with us for the fundamentals. A very good morning once again to you, Kunal, as well as Avinash. Thank you so much for joining us on ET Now, and let's continue, or rather start taking all of your stock related queries then. And this one is coming in from Subrata Ghosh, and let me actually read his message as he's written. Okay, Kunal, and this one is for you. He's saying this one is only to Kunal Tendulkar, his new name. He's the Tendulkar of our group is what he's saying. He's adding HCL Tech and Infosys on every dip, and now he has about 1,000 shares of each. He's already booked profit earlier. He wants to know whether he's doing the right thing or no. Kunal Tendulkar, what's your view on this one?
I also never knew my surname changed, but thank you so much for that. And it's a lot of privilege to actually, try and compare with the legend himself. But then, coming to your query specifically, and for HCL Tech, I strongly believe, and I think I've been making this point over the last 1-2 weeks, that the IT stocks are bound to get into a turnaround mode. You've not seen a bull market or an uptrend for indices which gets into a prolonged uptrend, and you see one major heavyweight sector being a laggard for years. And I think we've already seen 2.5 odd years of underperformance from these large cap or from the IT sector overall. So I believe that it's a matter of time, maybe in another couple of quarters, and you should see a big turnaround for many of these IT names. I think if you've been holding on to the stock, it's a very good price to try and even hold at current levels. The good part about the charts for HCL Tech specifically is that the stock has recently managed to come back above the 200-day moving average. I think that's a very positive sign for the stock overall.
All right, so that's the view coming in on HCL Tech. So if you believe that there is a scope of an up move, then which cricketer would you compare HCL Tech to then, Kunal?
HCL Tech too?
Yeah.
I think he's an emerging player, so I'm not sure of what exactly, what best cricketer to try and compare to, but I think it's an emerging stock which is heading towards a breakout or maybe a turnaround of sorts.
All right, maybe a turnaround stock. Then, Shrishti, do you have anyone? I believe you have any other query which will stump our viewers.
Yes, Sharon, a lot. But I was just amazed to ask like any cricketer or any stock, nothing of that sort. But a lot of queries, yes. And the next query that I have is for you, Avinash. Very good morning to you, first of all. And this query is coming from Mohit. He wants to have a take on NMDC. He has bought 500 shares at a price of 136 rupees. What's the take on this particular stock? His time horizon is for the next 2 years.
No, I think, first of all, NMDC operates in a cyclical commodity business, but I think his entry point in NMDC has been quite good. My sense is that, we are seeing early signs for the recovery in the metal cycle. And I think within that, iron ores are the starting building block. And there we have been seeing that prices have started moving slowly and steadily in global markets. So I think it's definitely going to be positive for NMDC in the coming financial year, that is FY25. We believe that, if iron ore prices increase by even 4 to 5%, that has got a significant impact on the overall profitability of NMDC. So I think he should continue to hold. My sense is that, he's already doubled his money, so some profit booking could be advisable, but clearly I think he should hold on for the next 12 to 15 months to get the bigger benefit of the growth cycle which happens in the metal sector. So I think he could probably look at even levels of 300 plus in the next, say, 12 to 15 months.
All right, let's take the next query then, and this one is coming in from Vignesh. He's writing to us from Vellore, and he has two counters, Kunal. Tata Steel at a price of 126, IEX at a price of 130 rupees per share. Should he hold or exit?
I think you should definitely hold both of them. Both of them are, almost priced similarly, 180, 183 respectively for IEX and Tata Steel. And I think both of these stocks charts are now heading towards a breakout for themselves. So metal has been a very strong performing sector, and I think Tata Steel was a bit late mover, I would say, late starter in terms of the price trend, but the stock is trying to play a very strong catch up, and I think at 180 plus mark, it still looks very attractive. And since you've purchased at lower prices for both of these names, I would definitely suggest a hold.
All right, then moving on, and the next query that I have, Avinash, is from Satyaveni. He's a senior citizen and is a long-term investor and wants to have an outlook on Sterling Tools as well as L&T. Any of the stock that you still like at this point in time for a fresh entry?
I think as far as Sterling Tools and L&T is concerned, both these companies look good, but Sterling Tools has actually jumped quite significantly. So I think maybe on dips he could look at buying this company, because this company is a well-established player in the fastener market, operates quite significantly in the auto sector, and I think qualifies as a good auto component player. With the kind of recovery we are seeing in the OEM sales, specifically for passenger cars, commercial vehicles, where the company largely operates, I think definitely Sterling Tools will benefit. Plus, they've now entered into the electric vehicle market, where they've got some few clients, especially from the two-wheeler segment. So that definitely will help the company in FY25. But buying the stock around 350, 360 odd levels would give a better risk reward for the investor. So I think as of now, if he holds the share, he can continue to hold. But any fresh buying, probably around 350, 360 could be a good bet. And as far as L&T is concerned, I think this is a buy on decline stock. I think I'm quite sure that in the next 2 years, looking at the kind of infra opportunity, defense, capital goods opportunity, we could see significant higher levels. But I think this is a compounder stock. So I think one should expect not more than 14, 15% at best in a year. So I think on declines, one can definitely accumulate for a 2-year time frame.
Okay, this one is coming from Sunny. He's writing to us from Kolkata and he's purchased 82 shares of ICICI Bank at 1,110 rupees per share. He has ITC at 431. View of any swing trades, Kunal, or is there any scope of big upsides in a week for these counters?
Well, I actually don't expect too much of an upside for ICICI Bank over the very short term, since your time frame is restricted towards 1 week. I actually believe that the stock may just about languish or consolidate at this 1100 to 1130 as range for the stock. Now, I'm not sure whether you're looking at 2% to 5% swing in the stock. If that's the case, then maybe 1130 could be an upside target which you can look out for ICICI Bank. ITC also, on the other hand, I think 440 has been a pivot, 430, 440 has been a pivot range for ITC, and the stock has been fluctuating into this band for, I think, the last 1.5 months or so, and that indicates that maybe the stock is just about trying to get into a time-wise consolidation, which may probably extend towards 1 more week. And ideally, we see that stocks, when they get into a time-wise consolidation, say for a matter of 2 months or 3 months, generally a fresh move starts, at the end of an expiry or at the start of a fresh expiry. So that's why I would probably believe that for the next 1 week, you might actually see more of a range-bound price action.
All right, moving on to the next counter there, and this one is coming in on, this one is coming from a viewer. He actually didn't share his name. Avinash, okay, her name is Vidya, is what I can see from her WhatsApp profile, and she wants an outlook on Linde India for a new investment or maybe for the next 1 year. Can she go ahead and invest afresh in this counter?
My guess is, I think, this company over the next 1 year, I wouldn't be surprised that some significant upside could happen, because, this is not a cheap stock. A fair to expensive kind of valuation is what the stock trades at. But yes, the opportunity for growth over the next 1 to 2 years looks quite promising. And I think the business is extremely profitable. And there have been some reports that possibly this stock could also get delisted at some point of time. So I think, if the investor has a short-term view, then I don't think the risk reward could be high. But yes, over the next 12 to 18 months, one could definitely use every dip to accumulate the stock, but keep a time frame of at least 12 to 18 months.
All right, Subrata Ghosh has also written, Avinash, that you're also one of his favorite analysts and he's been tracking you for a couple of years. So he's made sure that he mentions you as well, because he actually wrote the query just before the show could start. So he had no idea that today we'll have Avinash on the show. So he's making sure that he compensates for that as well, Avinash. But we have another query coming in from our viewer who's a long-term investor, and he wants to know about one of the counters that he's mentioned is Yuvraj is mentioned about Rainbow Hospitals. He's purchased 70 shares at a price of 1,140 rupees per share. He's having a mild loss in this one, but he can hold on for the long term. Does it make sense to do that? Also, Kim's also he has in his portfolio at the price of 2,220 rupees per share, Avinash.
No, I think both the stocks, Cheryl, he can continue to hold Kim's Hospital as well as Rainbow Hospital. See, I think Rainbow Hospital is a hospital which largely specializes in child care. And I think ever since its public issue, it's been favored by the larger institutions, the FIs. And I think this business is going to grow quite significantly over the next 2 years. In fact, hospitals are a space where I believe, we could see a lot of growth opportunity happening over the next, say, 12 to 18 months. The government is also going to announce several key measures, hopefully in the coming budget, which is going to be announced in July. So I think hospitals is going to be a buzzing space. I would suggest that if he has got a 12 to 18-month horizon, continue to hold to both these stocks. I think volatility will be there in the short term, but I think if he can hold on for the next 12 to 18 months, he can definitely earn a very decent risk reward in both these stocks. So I think it's better to hold and not panic as of now.
All right then. The next query that I have is on SCI, that's Land and Assets. And Avinash, once again, let me take it from you because this one is coming from KB Rao. He's already holding 1,000 shares and his buy price is 71 rupees. Wants to hold it for the next 1 to 2 years as well. Given that it's not much of a time since the counter got listed as well as demerged. So what's your view on this stock for the next 1 to 2 years? SCI,
Yeah, I
Land
think
and
I
Assets.
Yeah, I think clearly, there is hardly any fundamental news flow here. But I think one thing I can tell you that the kind of land assets SCI holds, I'm quite sure the company will plan to monetize it over the next 12 to 18 months. And I think looking at the trend in real estate prices, it's quite obvious that this business will be extremely profitable. Real estate continues to be a very buoyant sector. And I think looking at the kind of pre-sales of most of the real estate companies, it would not be surprising that very soon the company would announce some monetization plans. So I think the investor would have to wait for this event to unfold. But yes, over the next say 12 to 18 months, I think he could expect a decent risk reward. Once the numbers come out, the management commentary comes, the company announces its business plans. Only then the stock would start moving upwards. Till that time, it would remain range bound. But yes, this event is going to happen. So I think continue to hold. Good amount of appreciation can be expected over the longer term.
All right, this one is coming from Karishma, who's writing to us from Delhi. And Avinash, she wants an advice on multi-baggers for the next 2 years, like REC and Hindustan Copper. Any multi-baggers that you're spotting?
Yeah, I think clearly, we would not be able to pinpoint and say immediately that whether the stock will be a multi-bagger or maybe it would make a huge amount of money. But I think, yes, Hindustan Copper, if the investor can hold for the next 12 to 18 months, it is a monopoly player in the copper market. Copper prices have been moving up quite steadily. And I think, even in electric vehicles, a lot of copper is going to be used. So I think clearly the company is in a sweet spot. So I think, if the company obviously benefits from the global uptrend in copper prices plus increases its production, then I think you're bound to see better numbers. So Hindustan Copper current price plus maybe at some lower levels, one could definitely do a small SIP and include in their portfolio. My sense is I think keep a slightly longer time frame because the stock has now moved up quite significantly. So, you need to give in some more time if you want to have a very good risk reward.
Right. The next query that I have, Kunal, is coming in from one of your fans named Siddharth, and he wants your take on CDSL as well as Prestige Estates. The last time he's mentioning that you did recommend a hold on both of these names, and they have been doing pretty well, but he's still holding these counters. So, any update on that front, as well as can he go ahead and add Birla Soft at current market price?
Well, on both of these stocks, yeah, I would suggest a hold on both CDSL as well as Prestige. And I think you have to look at the sustainability of the trend into these stocks on the medium term chart basis. So on the short term charts, yes, these stocks may look a bit overbought. There could be a point where these stocks may get into a mild correction also. But then I think if you've managed to buy these stocks at much lower levels, then you're sitting on very good cushion as well as buffer in that sense. So I would probably suggest a further hold on both of these names because the medium term charts are still into a trending mode. For the third stock which you mentioned was
Birla Soft.
Birla Soft. Yeah. So I would probably suggest that yeah, it could be a good time when you look to start nibbling into the stock price, but I'm not sure whether you're looking out for the stock getting into a very strong uptrend immediately, because my sense is that the stock would probably get into a rally and a pause kind of a mode every now and then. I think I would probably suggest maybe a few of the other names, something for example, which is popped up on the radar is Usha Martin. That's a stock which has come back into a breakout mode. AB Capital is something which I've been bullish on. that's a chart which you can look out for. And I think one of the very recent breakouts is L&T Finance. So I think it's better to concentrate over here.
All right, this one is coming in from Dhruv, who's writing to us from Mysore. He's holding about 10,000 shares of Reliance Power and he's still holding on to it. Kunal, I'm not sure what his buy price was when he actually purchased this counter, but what's your take coming in on Reliance Power, not RIL, it is Reliance Power, so please I'll request my producer to show that particular counter. For now, let's take a look at what the markets are doing. But Kunal, what's your take coming on Reliance Power?
So, at an onset, of course, yes, the stock looks extremely high beta, but then, even high beta stocks at certain stage start to get into a trending mode. And there could be a possibility that Reliance Power may start to exhibit this kind of a trend mode, over the next maybe few weeks or so. So for what's happening is over the last 8 months from, I think October, November 2023, the stock had gone through a patch of very choppy kind of a consolidation. 34.5 was a major resistance for the stock. And on the downside, the stock tested levels of 24 to 25 twice in this 8-9 months of consolidation. But now that the stock is getting back towards a breakout, this week's volume so far has been quite strong and indicates that the stock may get into this breakout pretty quickly. So if you're looking at a breakout play, then 34 plus could be a very good level to try and buy the stock if it confirms a weekly closing about those levels. If not, then you can start buying at current levels and then maybe add on to a breakout if it happens for the stock in the near term.
All right, the next query that I have, Kunal, is once again coming for you. Mr. D. Cruz wants your take on ITC. He's holding 1400 shares, his buy price is 251 rupees, and he also has SBI, 1300 shares from a price of 273 rupees. Can he continue holding both of these counters for now, or rather book out some profits and move to some other names?
I think you can continue to hold on, and I'm assuming that it's more of long-term kind of a time frame which you're looking at from medium-term to long-term, because I think, as I mentioned earlier, ITC, I would probably expect the next couple of weeks the stock to remain into a consolidation. But yeah, I think from a long-term play, 400, 430 is a very good range where you can look to start holding on to or maybe adding on to the quantity for ITC. SBI, of course, one of the more stronger performing PSU banking stocks, and we've seen the stock outperforming over the last many months. So I would probably expect that the streak of outperformance should continue for SBI, so bullish on the stock.
All right, so that's the take coming in on SBI. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock related queries. Then Avinash coming to you for the next query. This one is coming in from Venkatramani, who's holding Exide from a price of 329 rupees, and the stock is seeing no stopping after the company did make an announcement that they have received some orders for the EV batteries from some of the global OEMs. Given the move and the fundamentals, do you believe he should go ahead or book out some profits after a one-way run-up, or continue holding it for the next 18 to 24 months?
I think definitely, the traction in the automotive battery market has become quite positive, and there are only two players, so it's an oligopoly kind of market. So I think Exide would definitely benefit, and I think the best part is that apart from the auto sector, Exide has got a large exposure to the industrial sector, specifically if you talk about railways, defense, telecom. So I think there's going to be a lot of headroom for growth in FY25 also. But nevertheless, I think his entry price has been quite low. So I think at least a 25-30% profit booking is advisable, so that his original cost becomes more or less negated, and he can then definitely ride the further growth story in a much more comfortable manner. So I think part profit booking, and then the rest of the quantity he can definitely hold for the next 12 to 18 months.
This next one is coming in from Sanjeev, who is writing to us from Bangalore. Kunal, this one is for you. He wants medium-term perspective on alkyl amines. He wants to know whether he should have a one-year view, as the investment cost for him is 30% lower than the current market price of the counter. Also, he has Bandhan Bank exposure. He's a long-term investment with no requirements to divest in the short to medium term. Given the track record of Bandhan Bank, he wants to know, would it be prudent for him to go ahead and shift to RBL Bank or HDFC Bank for the matter of fact? What's your take, A, on alkyl amines for the next 1 year? Will he see an appreciation in that? And Bandhan Bank, prudent to shift out of this one right now?
So in fact, start off with the Bandhan Bank, because my belief is that the stock has been a huge drag as well as an underperformer since last many years, and that's one of the major reasons why the trends for the stock on the upside are not sustainable. Now, when we talk of this purely as a chart or on a technical basis, then yes, I think it makes a lot of sense to shift from this stock towards private sector names. HDFC Bank could be a better fit because of the stability the stock offers and the way the stock is poised in terms of risk reward and the underperformance the stock has gone through over the last 1 to 2 years, broadly 2022 onwards. So I think in that sense, you may probably shift on to HDFC Bank, from the lot. Alkyl amines, on the other hand, I think could be a stock which is, I'm assuming you're sitting on 30% profit. That's what you said. So I think at current levels, the risk reward is very attractive for actually an add or an accumulate at current levels. Now, specialty chemicals as a sector is trying to get into a turnaround mode. We've seen many of the stocks starting to break past about their 200 moving averages. Alkyl amines is maybe some distance away from breaking past about those levels, but I believe pretty soon that the stock can head towards a breakout, given that the sector is also heading to a revival. So I would suggest an add on alkyl amines.
All right. So that's the take coming in on Bandhan Bank as well as alkyl amines. So that's the way how that's the query coming in from Sanjeev from Bangalore. But Shrishti, if you look at the markets, actually they're pretty much stable in those levels, isn't it? We're still away from those record high levels for the Nifty, and we are barely in the positive territory, isn't it?
Well, yes, the markets are looking quite stable right now, and a lot of these broader market stocks are also supporting. But one of the stock from the broader market space is Som Distilleries, and Kunal, J.N. Hansraj wants your take specifically on this counter. Wants to know at what level he should buy this counter. First of all, give your advice whether to buy or not, and if yes, then at what levels should he go ahead and buy the stock?
See, I think very recently, if I'm not wrong, the stock has gone through a special situation where I think from 300 as a price, 300, 350 approximately, the stock has been repriced to 100, 120 odd mark. So, and then when we look at the charts on the historical basis, the stock has done exceptionally well. I think 2020, if I'm not wrong, the stock was almost at 10 rupees or single digit in terms of the adjusted price, and it's now moved up almost 15x or 12x in that kind of a time span. So after such kind of a strong uptrend, there's bound to be a phase where the stock may get into a time-wise consolidation, but I think it's a very good chart. And if you're looking at adding on to the liquor space as such in terms of the stock holdings, then I think Som Distilleries could be a good addition over there. You may also want to look at stocks like Radico, which I believe is also heading towards a fresh breakout for itself. So that's another name which you can consider.
All right, this one is coming in from Thomas George, who's writing to us from Kochi. He has 500 shares of United Spirits, purchased at 1200 rupees per share, as well as CESC 500 shares at a price of 140 rupees per share. He wants to know what should he do with both the counters. USL, he is being concerned about this counter, saying that the stock is seeing some sort of a correction, but he is in the money in this counter. What's your take, Avinash, with United Spirits? Anything to worry about? Should Thomas George move out of it or stay put with this for the longer term, as well as for CESC?
I think both the companies, Cheryl, United Spirits as well as CSC, he can continue to hold, but I think he needs to give in a slightly longer time frame. See, as far as United Spirits are concerned, the liquor market has been growing quite strongly, and I think now with elections over, my sense is that you're going to see a good bounce back in consumption levels. United Spirits has been making a lot of efforts to introduce foreign brands, specifically the Diageo brands in the country, and I think this is going to boost up their profitability margins quite significantly. So I think give a time frame of at least 12 to 15 months, numbers should definitely improve, and I think that would help the investor to get a very decent risk reward. And as far as CSC is concerned, power plays are now in flavor. We expect some big announcement in the forthcoming budget, and I think that is definitely going to boost all power generating companies. In fact, CSC operates in the eastern part of the country and is one of the primary producers in eastern India. So I think continue to hold. Here also, I think you need to give a slightly longer time frame. But yes, both the stocks can be held on. Good amount of upside can be expected over the next 12-18 months.
Right, moving on to the next counter, and Avinash, once again coming to you. Rajesh Menon has actually bought SpiceJet 900 shares at a price of 70 rupees, and since February 2024 he's been holding the stock. What's the view on this particular counter? He can continue holding this for the next 6 months actually. So do you believe that in the short term, like in just next 6 months, given the kind of all the counters related to the aviation space is doing well, SpiceJet could do well as well?
SpiceJet will do well, but I think looking at the kind of leverage on the balance sheet and the losses, SpiceJet will find it little difficult to actually outperform in the market. And please let me tell you that, whenever we find that the equity base is also very large, plus there are a lot of issues related to the, management of the company. I would believe that, he's already purchased the stock at a higher level. He's not in the money. So a better stock could be GMR Airport, which is going to be a very strong wealth creator over the next, say, couple of years. So I think if we can switch SpiceJet to GMR Airports, that would be a better choice, considering the fact that, this is a monopoly business and, with more and more air traffic coming in, the airport business is going to be a good money spinner for the company. So I think, it would be better that he shifts here. And obviously in the next 12 to 15 months, he can recover his loss and make a good amount of money.
That's the take coming on GMR Airports. And remember that I mentioned earlier as well, you have Jeffries that has actually gone ahead and added in the portfolio as well. This morning you had it in the Greed and Fear note by I beg your pardon, Chris Wood of Jeffries. But let me come to you, Kunal. This one is coming from Sandeep Sharma, who's writing to us from Gurgaon, and he wants to know if BEL, BHEL, HAL and Mascon Docks at current levels are a hold, or should he look to book profits?
No, I think they're definitely a hold at current levels. I'm very bullish on the likes of, for example, BHEL and BEL out of the two names. HL, of course, has been doing exceptionally well also. But I think, you can't be invested into all stocks. So you have to pick out, the best names in terms of the price, trajectory and the way these stocks, they tend to be in terms of the beta nature. So I'd believe out of the lot, BEL and BHEL are the ones which I would recommend. They are the ones which I do track very closely. And yeah, I think all four of the charts, even Mascot Dock as well as HL, both of them are also a very attractive kind of a chart, for themselves. So if you've bought at lower levels, then I think you should definitely look to hold on.
All right, that's the day coming in on Mascot Talk. But with this, viewers, it's time to slip into a very short break here again. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock related queries. We are in the last leg of the show, and the next query that I have, Avinash, is for you. This one is coming from Krish, and he has an equal weightage in both of these stocks where he has invested in, that is Oil India as well as ONGC. Now, considering that Oil India has run up so much, would you advise to reduce some exposure or cut down some of the investments from Oil India and go ahead and invest some amount in ONGC?
Yeah, I think both the companies, Shristi, come from the upstream kind of, group. Both Oil India and ONGC have benefited significantly. But I think going forward, one must understand that, companies like ONGC benefit only when crude prices go up. So basically, since the investor has made a decent amount of money in Oil India, I would not tell him to switch to ONGC, but he could look at maybe some downstream companies like Indian Oil, or for that reason, HPBP, where I think, looking at the buoyancy in the automobile and the aviation market, and plus with crude prices remaining more or less soft, the margins for these companies are going to be much better than the upstream companies. IOC at around 170, BPCL, HPCL also at the current valuations. He could possibly use some of the profits to enter into these stocks, where I think the risk reward over the next 6 to 12 months could be significantly better than the upstream companies.
All right, let me take this next query. It's coming in from Vipin, who's writing to us from New Delhi. 3,000 shares of Engineers India. He's holding for the last 4 years at an average price of 119 rupees per share. He wants to know what is the near-term future of the counter. Should he exit at current levels, or is there any scope for further upside? What's your take coming in on this one, actually, Kunal? Because for the last 4 years, I'm sure EIL has seen momentum over the last 1.5 years or so, isn't it?
Well, I think it's an exceptional chart, if you ask me, and I strongly believe that the stock has much more headroom on the upside, because the stock has managed to come back into a 10 or a 14-year breakout. I think, if I'm not wrong, 2010 is where the stock had made a high of 220, 240 mark, and it's managed to make a comeback of sorts from those 2010-12 highs for itself, and that's a very strong indication that a major cycle has restarted on the upside for the stock. Now, remember, Engineers India and many of the PSU names, they are very high beta in nature, so they are bound to get into that 10-15% odd kind of a correction every now and then. So I think it's better to try and wait out for that phase of correction. Very recently, for example, if I'm not wrong, the stock had corrected from 275 or 280 levels to almost 210, 220 mark. So that was a classical zone where you should look to enter into stock. But from a long-term basis, I think it's definitely a hold.
All right, then the next query that I have, Kunal, is for you. Girish Iyer is holding 10,000 shares of BHCL and BEL, and he wants to know the short-term targets for both of these names.
So I would probably look out for say 315 to 325 as a potential target range for both of these names. I think BEL, we were discussing earlier also that how many of the defense stocks have been looking quite attractive. So I think I would probably place a target, say another 3% to 5% higher from current levels. And so would be the case with BHCL. The stock is trying to attempt back into a V-shaped recovery. And ideally for the first pit stop into a V-shaped recovery, these stocks, they come back to their previous major swing highs for BHCL. That level is around 350 to 325 range.
Avinash, coming to you, this one's coming from V. Murli, who's writing to us from Bangalore. He wants to know whether he can buy Zaggle Prepaid currently for a period. Okay, he's not given his time frame, but he's asking whether he can buy this one because the management is set to be targeting about a growth of around 55% or so. Do you think it's a good buy right now? It's a recently listed counter.
Yeah, I think the company's business model is very unique and has a very strong potential to grow over the next, say, 1 to 2 years. So I think my sense is that he can definitely buy in if he's got a 12 to 18 month horizon. I would suggest him that rather than buying all the shares at one point of time, he could do a small SIP because the stock has run up quite significantly. So I think at the current levels and on dips, he could definitely accumulate.
All right, the next query that I have is coming from Carol, and Kunal, what's your view on Godrej Properties? Carol is saying that she has already booked some profits out of Godrej Properties investment, and now is this a good time to enter DLF, or should she wait for some more correction?
I think it could be a good point to try and enter into DLF. And interestingly, what has happened is that the leadership has changed into the real estate stocks. So DLF was one of the first ones to start moving up higher, led by I think Sobha as well as Prestige. They were the top two mid-cap names from the real estate pack, which has started to move up higher a couple of years back. Godrej Properties had gone through a major phase of correction. Now the charts are completely different. Godrej Properties is acting as a leader in terms of the price performance, and you've seen DLF going to a time-wise consolidation. So I think it could be a good switch. So may not be exit fully Godrej Properties, but I think some part of profits could be booked over there, and that part could probably be invested into DLF as of now.
All right, with that, let's kickstart with the rapid fire then. And the first one coming your way, Kunal. This one is coming in from Venkatesh from Indonesia. Nuvoco Vista at a price of 312. Sharda Cropchem 500 is the buy price. Can he hold on for the next 3 years and add some more?
Yeah, I think you can continue to do that. Continue to add as well as hold.
All right, Avinash, what's your view coming in on Nykaa? Raghuram has been holding the stock since the IPO time. Good to hold on. The company did come out with the investor presentation today. Avinash, your view on Nykaa?
I think if he's got a 2-year view, he can continue.
All right.
Yeah, I think he can continue to hold if he's got a 2-year time.
All right, Kunal, coming to you then. This one is coming in from Sai from Dubai. He wants to know about Bata India. He has about 4,000 shares at 1,365. 1 year view.
I think it's an excellent hold. I would recommend a hold.
All right, Kunal, what's your view on Triveni Turbine as well as Renuka Sugar? Zenith wants to know, can she go ahead and invest afresh in any of these names?
See, Triveni Turbine is a different stock altogether, but the charts are looking more stable. Sugar stocks I'm very bullish on, so I would recommend a buy on Renuka Sugar. You may also look to consider Bajaj Hind as well.
All right, this one is coming from Ramki from Delhi. Avinash, this one is for you. He wants to know about good value consumption stock that he can look to buy. He's buying stocks which he believes will benefit from the PM Awas Yojana like Suraj Estates and Ajmera Realty. Any good value consumption buy?
I think he could definitely look at housing finance companies like Canfin Homes, or for that reason Aadhar Housing. These are definitely good bets. In fact, Suraj Estate also he can look at buying on dips. Definitely, I think this company should benefit from the government's recent initiative of 3 crore, free rural houses announced by the government.
All right, Kunal, your view on IRB Infra. CG has bought the shares at a price of 74 rupees. Wants to know the near-term target.
See, in fact, 74.75 is a major resistance for IRB Infra, so I'm not sure whether you'd want to hold on to the stock as of now, but keep a stop loss on this trade. I would probably recommend 64 as a stop loss.
All right, last one. Let me slip in this one coming in from Deepak Dave for Kunal Tendulkar. He wants to know about Barmer Lorry, 200 shares at 283. He's a long-term investor. What should he do?
Definitely a hold. I think it's a fantastic chart, and the stock is coming back into a breakout about 270 mark.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Avinash, for joining us on the show. And definitely, Kunal has been renamed by our viewers, and most of them are following the trend, looks like it. But yes, the trend of the market is stable, is just where it was when we started the show, Shrishti.
Well, indeed, not much on the index level, but a lot of stock-specific action, and that will continue on the next show. But for now, we are taking your leave. It's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.